All right. Hey guys, it's Julie here with one of our trusted partners, Jon Libman of Fairway Mortgage. Big question, right? Interest rates have been low for a long time. And I feel like for the past several years, correct me, it's what are rates doing? And we talk about they go up, they go down. They've remained relatively stable, hovering around that 3, right?
Yep.
But that seems to be the perpetual question. With prices so high,
Yep.
or prices have increased so much, everybody thinks that the rates must go up so that we can pop this bubble and drop it. They're going to creep up, but they're not going to be 50%.
Oh, definitely not. I mean, I think the biggest thing is, one, been reading tons of data on this, but coming into this presentation, I kind of was really digging in even more. Went to upper management, tried to get some data. The best one I found was actually the Mortgage Bankers Association, just referenced really just the rates in general. Mm-hmm. I mean, we have to remember, pre-pandemic, so what, 2.5 years ago, rates were in the mid to low 4s.
Yeah,
right?
and we thought that was
great.
great.
Right? And that's where they were at,
yeah.
right? And as soon as the pandemic hit, all of a sudden, the government stepped in, started buying more mortgage-backed securities, which then, in fact, lowers interest rates, makes the economy look better, right? Well, they've released a lot of data that they're going to start tapering off in March. Okay. Well, since that happened, even in the last 2 weeks, rates have jumped almost 3/8, I believe. Okay,
wow.
So it's not always the funnest news over the last couple of weeks. And I went back and looked at the data from before to now, based on what the mortgage bankers were saying. And if you look back in 2020, 21, rates really fluctuated in the mid to high 2s. Okay, so that was, most of last year was in the high 2s, right? Now, when you hit those 3%, the 4%, that's where it kind of panics people. It doesn't panic someone when it's at 3 1/8 to 3 1/4. It's when you change the number in front of it, right?
Right.
So I think the biggest thing that we saw was that the end of last quarter, right, rates finally went over 3, right? So now they're in the low 3s.
Yep.
And they're saying by the second quarter this year, they're probably going to be in the mid 3s. Towards the end of this year will be 4s.
Right.
Following year, because they actually predicted this out to 2024. So 2023 is also now going to show probably mid to low 4s, and 24 is also going to show that.
Okay. Which are still great rates.
Yeah.
It's just when you have the relativity of this.
Yeah.
And I think the thing is, when we sat, I mean, we talked about a forecast last week that, I mean, this parts of the country is slated to grow 16% this year. I don't find that to be realistic around here. We're targeting more about 3 to 6%. But when you look at that growth, plus the growth of interest rates, I mean, it just shows you month over month, not that anybody should panic and buy right away, but the notion of let's wait, there's just no economic forecast that support that at this point.
There really isn't. I mean, people that bought 6 months ago, a year ago, they could be looking at they got in at the right rate, right? If we're predicting already that rates are easily going to be 0.5% higher than they are now within the next 2 years, properties already took the big jump, right? They all jumped roughly about 17 to 20% in the last 2 years.
Yeah.
Right, if they're moving 3%, 6%, well, either way, 0.5% higher on an interest rate is a couple $100 a month.
Right, which is an even bigger impact than the market increase.
Exactly, because 10 grand on a mortgage payment, right, is $50.
Yeah.
But the difference of 0.5% on a mortgage payment is $200 potentially, right? So that's a major difference or a major impact in that.
Now, silver lining, right? Even with this increased rates, you look at a projection over time. We still look at, when we look at that month over month or that 30-year projection, it still becomes, once you pay down, a positive impact on your portfolio with these higher interest rates. And certainly there's people watching who have bought houses at 10 to 19% interest. So this increase doesn't mean it's time to hit the panic button. We still have a lack of inventory in our area, not even a lack of inventory, a housing crisis. So we don't expect this bubble to pop, but inevitably we're going to see some byproducts of the pandemic, right? And that overall inflation. So what do you think this would mean if we reference, for me, if I look at anybody who purchased a home and say, call it 2015 to now, right? We look at people usually buy on average or move within 7 years. So if we go back then, real estate wise, we can say their equity potential in such a short time is tremendous. Can you think off the top of your head who should be targeting for a refi based on when they bought or last financed their mortgage?
So the tail end of about 18, rates were in the high 4s, mid to high 4s. But realistically, with the increase in 20% of values, anyone that has private mortgage insurance or PMI, they should be the first people to be picking up the phone and asking.
Yeah.
Most people took advantage of it, but I think the biggest thing, I remember we were doing our continuing ed last quarter, and they discussed that only 26% of people that actually had the ability to refinance did.
Wow.
Right? So you got to keep something in mind. And I know that sounds wild, but part of it is because a lot of people that owned home were furloughed or laid off.
Okay.
right? Because of those, the way our industry looked at that income from 2020, it was very difficult for these borrowers to qualify.
So the external circumstances supported them, but their personal ones didn't. Which I
Yes.
think just, what we always say, right? You have the national news, you have rates, you have all these things you're hearing from the media. Personalize it. Reach out for a real estate consultation. Reach out for a mortgage consultation. Get an idea of how these numbers, these rates, these fluctuations really impact you. It may be that you're never moving. Call me if you need an updated sort of value before you pay for an appraisal,
Yeah.
right? Talk to John if you just want to sort of get a big picture overview. Could this make sense? At the end of the day, with the market increase the way it has and the rates having some fluctuation the way it has, it just proves to be a financial opportunity for a lot of people that clearly, like you said, simply aren't taking care of it.
Even if just open to a conversation, right?
Yeah.
Just to prepare yourself for that financial data or just to prepare yourself investment-wise.
Yeah, to know what you're dealing with. Well, John, thanks as always for
Appreciate it.
being a trusted resource. If you need anything else on the real estate and mortgage front, don't hesitate to reach out. Happy New Year.
Thank you.